Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 5th of February 2021. Alright everyone, let's get into the news from the day. So I did promise on Twitter today that I would clarify what I meant by this tweet here, and I'm going to spend a little bit of time talking about this, and I think you'll get a lot of value out of it. But basically what I tweeted was, I have never been more bullish on Ethereum than I am today. Now obviously, I'm always bullish on Ethereum, right? I'm always bullish on ETH. You know, for those who have followed me for a long time, I mean, even when ETH was in the double digits, during the bear market, I was bullish, right? I never kind of stopped being bullish, and obviously I'm still bullish today. But I guess while I was sitting here today and I was like just reading through some things and on Twitter, I just all of a sudden just felt like, you know, all these kind of puzzle pieces in my head kind of clicked together and just made me like more bullish than I've ever been, like totally. And it's probably hard to believe because I've been bullish for so long, but yeah, it was just a weird feeling. So I'll run through why. And before I do, I just want to say nothing I say is investment advice. Obviously, a lot of what I'm going to talk about has got to do with the ETH price as well, and like ETH's fundamentals and things like that. So I just wanted to clarify that first. So let's jump into why I am so bullish. So I guess for me, you know, I started my Ethereum journey in early 2017, and I've seen the space evolve so much since then, right? We're 3 years on since then, I think 4 years actually, wow. Okay, it's been longer than that. So 4 years on since then, and yeah, the space has changed dramatically. We've gone from Ethereum's only use case of being like an ICO kind of token platform to being an entire platform for like so many different economic use cases, right? So obviously DeFi is a big use case here. Now, I think DeFi up until DeFi summer, and even like after that, I think it actually took longer than DeFi summer for this to happen. But at this point, it's been validated as a use case, right? There isn't really many doubters of DeFi anymore. The only doubters that I see are kind of Bitcoin maximalists who obviously they're going to doubt anything that isn't Bitcoin and still call it a scam or whatever. But in terms of like the Bitcoiners, the moderates, the quote unquote general crypto people, you know, even competitor chains to Ethereum, right? They've all kind of capitulated, I guess, in a way, or at least realized the value of DeFi. Now, that is absolutely massive. We've seen it play out on the markets. We've seen all the DeFi tokens go up. We've seen the usage of DeFi explode. And, you know, for me, it's become not a kind of not an if, but a when sort of thing, right? You know, previously, like, it might be hard to believe now, but before DeFi summer especially, for a lot of people, for most people actually, it was not like, you know, this is going to work, this is going to change the world. It was like, you know, maybe this will work, you know, there's all these issues with it and we have to solve them. And if we don't, it's going to fail. And, you know, to be fair, if we don't solve some of the fundamental issues, it might still kind of maybe not play out like the way we want it to. But I think at this point, you know, there's way less of those people, and it's more that everyone kind of believes this is what is going to take over the traditional finance system, right? This is going to be the future of finance, or the future of France, as the meme goes, right? And I don't think there's many doubters left for that. So that was the first thing that I kind of like just sat there and really, really took in. I really kind of just took in how far we have come with DeFi specifically from, you know, Maker launching in December 2017, which I guess I would consider like the start of DeFi, even though there were some things before that. I would consider that like the start of modern day DeFi, at least. And then since then, we have come so incredibly far. It's actually insane how far we've come. And it might seem like a long time, like 3 or 4 years, but that's actually a really short time considering what we're trying to do here, right? We're trying to recreate the entire financial system on new infrastructure, brand new infrastructure built from scratch. This isn't like a fintech company building on traditional finance infrastructure that's already there. We're building entirely new things here from scratch, never been built before, you know, and we've done, you know, we've managed to create a booming ecosystem within 3 to 4 years. I think that in particular is just a reason enough to be bullish, right? So other than DeFi, we've got this kind of, over the last few months, the traditional finance system actually starting to pour into Ethereum, right? And, you know, I refer to traditional finance as TradFi, so I'll just use that. But TradFi is coming in a really, really big way. And there's no way they would have touched Ethereum or DeFi pretty much like pre-2020. They would not have even cared about it. They were just getting their feet wet with Bitcoin, right? They were understanding that. They didn't really care about Ethereum and DeFi. They didn't really care about to know about it. You know, maybe some of them thought it was a scam or something, right? So I think that's a huge kind of narrative going forward. I mean, you have people like the Winklevi twins, right? The Winklevoss twins, known as the Winklevi. They were just like big Bitcoin proponents until recently. Until over the last, I guess, year or so, they've become huge proponents for ETH and DeFi. And you can actually see this playing out in the markets where the DeFi tokens that the traditional finance people are talking about, like Aave, are going up really, really fast, right? Especially because they're on Coinbase. And Aave deserves to as well. Aave is an amazing platform, don't get me wrong. But you know, when you have Mark Cuban and the Winklevoss twins and Raoul Pal, right, all these big traditional finance folk talking about this sort of stuff, I mean, Mike Novogratz used to say the herd is coming, right? And he's been saying that for a while. I think he was too early. I think now the herd is coming. I think now it's gotten too big to ignore for the players in the traditional finance system. I mean, on Monday, we have the CME futures going live, right? I think people may have forgotten that. That's happening on Monday, right? It's only a couple days away. So that's happening for ETH, which is just insane for getting traditional finance people into ETH and getting exposure to ETH and getting their feet wet with it, right? And then we have like Mark Cuban tweeting to his millions of followers about using DeFi and about how DeFi, like during the GME saga, how DeFi can fix it and help with it as well. Right, you have the Winklevoss twins who have very, very deep traditional finance kind of roots, right? They run a centralized exchange called Gemini. They grew up with in kind of like an old money family where their family like is pretty, you know, has their roots set there. They're obviously famous, right, for I guess like from Facebook fame. So, you know, they're not nobodies, right? They're literally like celebrities, right? And they're not celebrities in the sense of, you know, when we saw some celebrities tweeting about Dogecoin, they're like celebrities in the place where the money is, right? Where all the money's in traditional finance. You know, if you look at kind of charts and of like where the money is and how the wealth is distributed in the world, most of the money belongs to the older generations, right? You know, I think a lot of it belongs to the boomer generation. Now, obviously, most of them aren't in crypto yet, right? Pretty much all of that money is not in crypto yet. So what do you think happens when that money makes its way into crypto? What do you think happens when BTC and ETH get put into just like these kind of like traditional investment vehicles, right? As kind of like just the thing you buy for retirement accounts, for all this sort of stuff. You know, what do you think happens? I mean, I can tell you what happens, right? But I'm sure you can imagine what happens then. But it's not just the prices, it's also the use cases, right? These people validating DeFi and Ethereum for the traditional finance space is just incredible, right? Like, that's what we need to happen. Yes, we're trying to replace them, right? But we'd rather them kind of like replace themselves. We'd rather them come into the ecosystem, figure out how they can work within it, right? And how they can add value. And then just kind of work with us rather than like just sitting idly by and watching themselves get obliterated, right? I mean, some of them I would like to obliterate, right? So some of them are parasites, and you know, even if they tried to work within the ecosystem, they'd probably be parasites within DeFi too. But the beautiful thing about DeFi is that it punishes this, right? You cannot be parasitic in DeFi. You know, you can try, but eventually you're going to lose because this is neutral infrastructure, right? This is something that can be you can be forked, or someone can recreate it and make a better and more neutral system, right? All these old tricks that you use in the traditional finance system to screw over people, you can't do that in DeFi, right? There are some things you can do in DeFi, don't get me wrong, right? It's not a perfect system, but it's much more open. So, you know, the DeFi battleground is not somewhere where traditional finance people can win with their current tactics. So, yeah, I'm looking forward to that. Layer 2 taking off way quicker than I expected, actually. Like, I'm a huge Layer 2 bull, but it's actually just amazing how quickly we've already seen the kind of, I guess, not only the volumes grow on Layer 2 exchanges, as I described the other day, but projects adopting it. Synthetix is going full steam ahead with Optimism right now. You know, Uniswap is already confirmed to be working with Optimism. Chainlink as well. You know, Kain put out a teaser tweet today, which I've got here, that I'll talk to a little bit more later about, like, there's going to be more projects, you know, kind of adopting optimistic Ethereum than people think. So Layer 2 is incredibly bullish, and it's coming at the right time as well. It's coming when gas fees are high. People are feeling the pain. We feel like we're on dial-up internet. We need to get to broadband. So that's another thing there. And I talk about a Layer 2 a lot, so I won't go into too much more detail there. Yeah, on the gas fees note, even though the gas fees are high, right, people are still using the chain. Like, people always say to me, isn't this bearish for ETH? And I kind of say to them, like, so you're saying that people having to buy ETH to pay for gas fees is bearish for ETH, right? And then they're like, oh, I didn't think of it like that. I'm like, well, I don't see how people using the chain, having to buy ETH to use the chain, right? And using the chain with that ETH too, as like trustless collateral in DeFi, or using it as a productive asset in DeFi, I just don't understand how that can be bearish, right? How can it be bearish that something is being used? Like, just because the gas fees are high, and I get it, not everyone can afford those gas fees. I mean, at times it really annoys me too, having to pay them, right? But at the end of the day, if you're willing to pay the gas fee, then it means that transaction is worth more to you than the fee. So you still, should net out profitably, right? Depending on what you're doing. If you're speculating on tokens and you're taking a risk or whatever, but at the end of the day, if you are doing those transactions, they mean stuff to you. And if you're priced out of those transactions, then I get that, and we're going to fix that with layer 2 hopefully, and some other different solutions coming online there. But just in general as well, the narrative around Ethereum being the most used blockchain, I went on crypto fees the other day, and I think Ethereum is being used like 4 or 5 times more than Bitcoin in terms of fees, right? So that narrative is extremely powerful, very, very powerful, right? Because it makes people kind of question things. They're like, well, fee revenue is one metric you can't game, because to game it, you have to actually spend money, right? So, you can game it, but it's extremely hard and extremely expensive to game it. So people kind of think, like, okay, well, if people are willing to kind of like spend this much money to use Ethereum, then how is this not bullish for Ethereum, right? How is this not bullish for the entire ecosystem? The rational people and the people paying attention know that we're fixing a lot of this stuff with layer 2, and, the end users won't have to deal with this forever. So that's, the high gas fees have always been incredibly bullish for me. And another reason is because it encourages the adoption of layer 2 as well, which I've spoken about in the past. So yeah. And then next up, we have the ETH2 launch, right? The ETH2 beacon chain launch, phase 0, whatever you want to call it, went so smooth. It's insane, right? I think even the researchers and developers were very, very surprised by how smooth it went. I think they were confident in it because we did so many test nets, but it was literally a perfect launch. I don't think anything could have gone better than how it went, right? We got up to over 95% participation from validators very quickly, right? The slashing mechanisms work correctly. The chain hasn't halted. The chain hasn't needed to be restarted, right? Clients are working as they should. They're talking to each other. Everything went so smoothly that it was a massive vote of confidence for the Ethereum ecosystem, especially because we hit the minimum ETH required to launch ETH2 on the date that we were supposed to do. And I remember that day. It was one of the best days of my life. Like, not even kidding. That was just such an awesome day to be in the Ethereum ecosystem. So that was a massive validation of Ethereum and ETH, right? And now the work on ETH2, while it's quiet, it's continuing. They're doing the first hard fork in July for the beacon chain to add a bunch of new things to it, and to kind of make some tweaks to the penalties of slashing, because it was actually set to be weaker penalties at the start, and they're going to put in the original penalties now. And things like sharding is coming along, and the other kind of like things coming into ETH2 with the merger and stuff as well is coming along. So yeah, that's all going really well as well. So that's another reason why, I'm really bullish. And on that note, in terms of like Ethereum protocol development, EIP 1559, right? Just the narrative that EIP 1559 is coming, even though we don't know exactly when it's coming, is also incredibly powerful. Because I think people understand how 1559 can add value to ETH, the asset, how it can smoothen out the transactions on Ethereum. It's not going to fix the high gas fee problem. I want to make that clear, but it will act as a way to smoothen out transactions, to give us better fee estimations, and to give us an on-chain kind of gas oracle or gas price oracle to help with that kind of fee estimation as well. So, and then that's closer than you think. I think people are thinking that it's like a year away. I don't think it's a year away. And I've speculated before that I thought it would come in July or August. Pure speculation. Do not quote me on that. I'm just speculating, but I've said that before. I have relative confidence in that, but we'll see how we go there. Next up is NFTs and crypto art. Do you know how many new people are coming into Ethereum right now because of NFTs, right? That have zero interest in DeFi, in DAOs, in Ethereum protocol stuff, right? They don't really care too much about that stuff. But what they do care about is collectibles. They care about art. They care about digital art once they get it, right? Artists are coming in, tokenizing their art, getting value out of it. This kind of whole space has just blown up, and it is amazing because it's bringing in a new set of people into Ethereum that would have never come into Ethereum through any other of the many doors, I think. Maybe they would have used DeFi one day, but not as part of Ethereum. Maybe they were using DeFi through some kind of broker or centralized kind of exchange or something. So to see them actually, maybe download MetaMask or download a crypto wallet, interact with NFTs, buy crypto art, buy it with ETH, because the entire NFT space is actually denominated in ETH, because ETH is money. So no one can say that ETH isn't money anymore. Just going to make that statement. So that's incredibly bullish, right? The ETH price being this high is also incredibly bullish because it validates all the work that we've been doing, right? If ETH's price was stagnant, even after everything that's happened, the growth of DeFi, ETH2 launching, right? DeFi being validated as a use case, TradFi coming in, layer 2 work, right? The gas fees being high, all this sort of stuff, people understanding ETH as a financial asset more. If the ETH price was still low, that would be, incredibly bearish, right? That would mean that no one cares to buy ETH, even though all this stuff is kind of adding value to it. But that didn't happen. ETH is over $1,600. Yeah, $1,600. Like, if you told me that ETH was going to be over $1,600 in February, like even a few months ago, I would have called you insane, because ETH was $400 in November. 400 in November, right? November was 3 months ago. Seriously. So the ETH price being as high as it is and continuing to grow is massive validation, and it's reflexive. So the higher the ETH price goes, the more bullish people get, right? And then it just kind of like snowballs from there. And because of the ETH price being high and other DeFi tokens kind of going up as well, there is so much more money in this ecosystem now, right? There's so much more money to fund development of things, to get people hired, and people coming into the ecosystem wanting jobs. We can hire them. We can do awesome Gitcoin grants around, where millions of dollars are given to open source, right? People are quitting their jobs to work full time on like whatever they want to work with in Ethereum, right? So that's obviously a byproduct of the ETH price going up, and it's amazing, right? It's absolutely amazing. And this is why I care so much about the ETH price going up, or at least one of the reasons. Obviously, I care about it for other reasons, but one of the main reasons is because of the fact that when we're in a bear market, people have to grind. People have to kind of be very conservative and try and make it through, because you never know when the bull market's coming back. And in saying that, this bull market's not going to last forever. So if anyone from any of like teams are listening, any kind of founders, just make sure you have enough runway, for the next few years. Don't rely on the bull market sticking around forever, and don't put your entire treasury into volatile crypto assets. Keep some in stable coins. Not like investment advice or anything, but I think that's just prudent kind of treasury management. But anyway, that's the kind of note there. And then lastly, all of the on-chain metrics that I'm monitoring for Ethereum are going absolutely bananas. They're incredibly bullish. They've never been more bullish. And I'm not going to go into each of them now, because I actually have a dedicated video coming out for that on the weekend. I call them the Daily Gwei data pumps. I put out one so far, which covered, I think, November or December. Or I think it covered November. I'm going to put out one this weekend that covers December and January, and I'm going to show you what metrics you need to look at to kind of track this bullishness and why it's bullish, right? So yeah, look forward to that. Subscribe to the channel if you haven't yet, because you'll be able to, you'll miss that if you don't. So yeah, that is that tweet expanded for 18 minutes. Oh boy, okay. I spent a long time on that. But this is why I couldn't do it on Twitter, because I explain things a lot better when I'm talking to, basically to an audience like you, like all of you watching. And I hope that you kind of are as bullish as I am. I mean, I just got myself even more bullish talking about all that. So yeah. Anyway, I'm going to move on to the rest of the stuff I wanted to talk about, but that's that tweet not in a nutshell, I guess, like just there summarized basically. As I said while I was explaining about that tweet, the CME futures are launching on Monday. I kind of lost track of the dates because of like COVID and because of just like the bull market. I kind of lose track of time, if I'm being honest. And then I realized before, I'm like, oh, it's Feb 5th. Oh, wait, CME ETH futures are launching Feb 8th. Oh, wait, that's Monday. And then I just put out this tweet. I'm like, y'all are aware that, that the CME futures are launching on Monday, right? So yeah, that's why I put out that tweet there. And as I was talking about before on layer 2, Kain put out this tweet today saying optimistic Ethereum. So this OE that you see here on screen stands for optimistic Ethereum. So he said optimistic Ethereum native projects are coming, and sooner than you might think. I just explained what he meant by that, how, there is more kind of projects coming to the optimism kind of ecosystem than you think. You think maybe it's just synthetics and Uniswap, but there are actually more coming. I don't know exactly which ones are coming or which ones aren't, but their technology is ready and people need scaling now. So there are definitely a lot of projects kind of talking to them, looking into layer 2 solutions, looking into which solutions kind of, I guess, work best for them. So that I think that's what kind of Kain meant by this tweet here. So a really great tweet thread from Daryl here from Mechanism Capital. So he basically put together this thread and says that market cap or fully diluted value / TVL is a meme metric that really only considers things from surface level and should never be the only metric which you use to approach an investment in DeFi. Now, we all know what market cap is, right? And we all know what the fully diluted value is. At least I hope we do. So let me explain the difference if you don't. So market cap is basically the current price of the asset times the current circulating supply of the token. All right. Fully diluted value, as a kind of difference in market cap, right? It's still referred to as kind of market cap, but what the fully diluted value measures is the current price of the token times the total supply of the token, right? So you could have, say, 1 million tokens that you'll ever have, but only 100,000 of them are issued. So your market cap would actually be 10% of the value of your fully diluted market cap. And people look at that and they get bearish, right? They're like, okay, well, this thing's already worth $1 billion. Even though the market cap's only 100 million, that means there's $900 million more kind of tokens coming to market. That means I'm going to get dumped on. But that's, as Daryl says here, that's a very surface level understanding of how these things work. You need to, one, understand how those tokens are coming into the market, right? The rate at which they're coming into the market, who they belong to. As an investor myself, I can tell you right now, a lot of investors don't just get their tokens and go to Uniswap and market dump them. That's just not how it works, right? They work very differently to kind of retail investors, but just by nature, right? Some of them will, some of them are mercenaries. I'm not going to call any out or whatever, but they don't, they're smart enough not to do that, right? And also, a lot of them are in it for like 100 times, 1,000 times. They're not in it for like a 10 times. Like, I know that sounds crazy, but they want to return as much money as they can for their fund. So they're not, if they're bullish on a project and think that it's still, got a lot of growth left in it, this is the mistake that I think, retail investors make, and I've made a lot in the past, is that you get a 10 times on something, right? Like, hopefully some of you have had that experience before, and you'll sell because you'll be like, oh, it's already gone up 10 times, right? How much more can it go? And then you see it go up even more, and then it goes up even more, and then it goes up even more. As an example, imagine you bought ETH at $1, then it went to 10 and you sold, right? Then you sold in 2016, and then in 2017, it went to $1,400, right? Case in point, not investment advice, but if you are bullish on an asset, right, and you're selling because it's already gone up a lot, that's just not a great investment strategy in my eyes. And that's not the investment strategy that funds use either. So most funds, at least. Some of them, it's kind of like, some of them are definitely mercenary. But other than that, Daryl also goes through that, looking at the TVL in different DeFi apps, like what is that TVL being used for? So TVL stands for total value locked, which is the amount of capital in the system, in that protocol. And he basically says, what's it used for? What percent is put to work? Is it sticky? How can it grow, right? How can it 10x? Where is the value being captured and retained? And things like that. And then he goes through some examples here of each of them. I'll link this thread. You can read through the whole thing because I know I'm going to go over time if I talk too much about this. But yeah, basically, it's funny because like it's kind of hard in a bull market to do fundamental analysis on this stuff. I'm going to give you one example and then I'll move on. The Uni token, last time I checked, was worth $20 billion fully diluted, right? The Uni token currently doesn't capture any value, right? It is only a governance token. But if you saw that and you said, okay, well, it's already worth 20 billion fully diluted, right? It doesn't do anything. It's only governance. It's overvalued. That, again, is a surface level understanding. What you are buying when you're buying Uni, what you're betting on is that the fee kind of capture will get turned on. You're betting that Uniswap volumes are going to keep exploding in growth, right? You're betting that Uniswap as a platform has extremely sticky TVL, which I think it does. We've seen that play out before. And you're betting on the Uniswap team being able to continue innovating and V3 to be like everything we want and all that sort of stuff, right? And not just the Uniswap core team, but like the whole ecosystem. So if you just look at something and say, oh, it's only a governance token, right? That just is a very surface level understanding of what these things can be. And if you really think about it, a governance token, when done correctly within these protocols, can be used to do anything. It can be used to do absolutely anything, right? Turn on fee capture, burn tokens for whatever reason, add new features, add new fee revenue, like all this sort of stuff, add new kind of like value capture mechanisms for the token. So I think that's just a good thing to keep in mind there. So the Jiho from Axie Infinity put out this tweet today, and I'll read it out. So he goes, think gas is expensive? Try sending out your Pokemon cards to PSA for grading. Shipping plus grading fee. NFTs are a 10 times improvement even on the Ethereum mainnet. Now, for those who don't know, the Pokemon trading card game is a pretty popular kind of card game in the world. Not so much for the game aspect of it, but for the collectible aspect of it. I'm personally a very big collector, or was at least. I don't collect the newer editions. But the older sets from like the late 90s, early 2000s are worth a lot. Now, what people do is that they'll get their cards graded, like the quality of them graded. And PSA is one of the grading kind of companies. But to get it graded, you have to ship it to them and then pay a grading fee. Now, when you ship it to them, you're not just shipping it to them in an envelope, even though it's a card. You're shipping it to them with insurance on it, right? You're shipping it in a very like kind of like maybe a box with like Glad wrap all around it and like protect it as much as you can. Because if you're getting a card graded, that means that you know that that card's worth a lot already, right? Even ungraded cards are worth a lot. So what ends up happening is you pay this enormous shipping fee, you pay this enormous grading fee just to have the quality and the authenticity of your card verified by this third party, right? And then, and then he goes on to say that NFTs are a 10 times improvement on this, even though the gas is high. And they are. I've spoken about NFTs, I think a few days ago, that basically, you can kind of verify that an NFT is legit and kind of like and cryptographically legit because it's on the Ethereum blockchain and you can see that it is not a copy or anything like that. It's not a fake, right? And the quality of it, I mean, the quality doesn't deteriorate because it's not a physical object. So yeah, this is kind of the same argument with, I guess, like comparing BTC to gold and like all the different kind of benefits to that. I think comparing physical collectibles to NFTs also has benefits, right? But in saying that, and I mean, you can see behind me, I have tons of physical collectibles that I really wouldn't care to own as digital collectibles, if I'm being honest, because there's like a difference there. But I still think Jiho's point stands here. So yeah, I thought this was an interesting tweet. All right, so this was very interesting today from Coinmetrics. So they put out this chart that shows that ETH's daily transaction fees yesterday topped $22 million, which is an all-time record for crypto fees across any blockchains. It beat BTC's all-time high of $21.4 million in December of 2017. And you guys will remember that December 2017 was the top of the BTC bull market. So BTC went to 20K then and topped out there, right? And the fees, well, obviously on the chart you can see, spiked up very high. But basically, yeah, on Ethereum yesterday, $22 million was an all-time record across not just Ethereum, but also Bitcoin, which I thought was huge, right? And I don't think we're done yet. I think we're going to go past this 22 million as the bull market heats up. I can see us going to like $50 million daily fees. And yes, that means the Gwei price is going to go higher than it is today. It's around, what, 185 right now. It's probably going to go to like, what, 500 or something. I'm sorry to say, but I just don't see how it's going to go down with all of the new people coming in. But we'll see, right? Maybe it'll find an equilibrium and it'll find like a place that it wants to settle down at. But yeah, we'll see. So yeah, this was just incredibly bullish to see, I think. So speaking of gas, Will Price put out this interesting tweet today that basically says that Coinbase currently uses 25% of all ETH block space. Now, I wrote about this in the Daily Gwei newsletter, and you can go read that for a deeper breakdown here. But Will suggests here that with a different architecture, they would be able to save 20 to 40% on gas, like use 20-40% less gas. Now, Coinbase obviously is the biggest US-based exchange. They interact a lot with the Ethereum blockchain, right? With people wanting to withdraw to it, and they do a bunch of other stuff with it too. I think they do some DeFi stuff with their addresses and things like that. So, the fact that they're using so much block space is incredible. That's a quarter of all Ethereum block space, right? That's a quarter of the Ethereum network just being used by one entity. And the other entities that are using it are like Uniswap, the contract, and the ERC20 contract for Tether, are two of the other big gas guzzlers. So yeah, I just thought this was a really interesting stat. And in the Daily Gwei newsletter today, I wrote about how different entities can be better stewards for the blockchain, for block space. They, as Will says here, Coinbase could improve their architecture and save up to 40% on gas, right? That's the same principle applies for anyone using the chain. But I'll let you read the newsletter in the Daily Gwei if you want to hear more about that without kind of diving too much into it today. So Blocknative has announced today that they partnered with Curve Finance to basically monitor transactions in the mempool and give kind of notifications on Curve's front end here. Now, for those who don't know what Blocknative is, they're basically they call themselves masters of the mempool. And I guess for those who don't know what the mempool is where all the transactions go before they're included in a block. So whenever you put a transaction in and you're waiting for it to be confirmed, it's in the mempool. And that's kind of like where all this, I guess, stuff happens around the dark forest and, MEV. Those maybe words you've heard before, and front running and stuff like that. That all happens in the mempool before it's actually included in the official Ethereum blockchain or in a block, in other words. So yeah, Blocknative is the masters of that. They monitor it with all their infrastructure, and that allows them to give really fast and sometimes like real-time and accurate notifications when you're interacting with things. So say you kind of interact with Curve, it'll pop up a notification for you on Curve's front end that says, you've done this, and then as soon as it confirms, it'll tell you it's confirmed, and there's a bunch of other kind of pieces that fall into that. So yeah, if you haven't checked that out yet, I definitely suggest checking it out. And they also have what's called a Mempool Explorer, so you can actually have look into the mempool and see what's going on there. Now, us regular folk probably don't need to do that, but people like traders would like to do this, because if they want to see what's going on in the mempool and kind of monitor what people are buying and selling and things like that, or people building bots and stuff will want to do that. So if that's you, definitely go check that out. All right, the last thing to talk about today, and I'd be remiss if I didn't talk about this. I know I've gone over time, but I have to talk about this. So the latest DeFi exploit featuring Yearn Finance. So an attacker profited $513,000 worth of DAI, $1.7 million worth of USDT, and $506,000 worth of 3CRV, which is the pool LP token of the 3CRV curve pool, basically. So I'll let you read this thread. I'll link it in the YouTube description, because I'm not going to read out the whole thing. But basically, Igor here describes how it works. And you could probably guess it was a flash loan related attack where someone flash loaned a bunch of ETH, right? They off DYDX and Aave. Then they borrowed stablecoins using that ETH as collateral on Compound. Then they kind of did some stuff in Curve and kind of exploited some weaknesses with, I guess, with Curve and how they do I guess pricing of the different stablecoins, and then kind of profited from that, basically. So I think I'll let you read this thread. I'll put it in the YouTube description. But I think I saw one of the Yearn Finance team members say that the response time to this was about 10 minutes, which is actually quite good. So they were able to freeze, I think, the hacker out and kind of make sure that no more money could be drained with this exploit, which I thought was pretty cool within 10 minutes. But this also kind of falls back to, I guess, just the general DeFi security, right? People probably assumed that Yearn was one of the safer protocols, and it turns out it wasn't, unfortunately. I'm going to say straight up, you're never 100% safe in DeFi. You're never 100% safe in CeFi, right? There's varying kind of degrees of safety and security, and you have to kind of be comfortable with how much risk you take on. So, I would say that some of the safest protocols in DeFi are the ones that have been around for a while and never suffered an exploit like this, right? And there's only a handful of those. I think there's Uniswap, Maker, and Compound, right? But Maker and Compound have also suffered kind of issues where on Compound, they weren't using a robust enough oracle. So what ended up happening was that, and I spoke about this before, and you might remember, was that there was an oracle exploit where the price of DAI went up to like $1.20 or $1.30, and Compound read that as $1.30, right? Even though it wasn't actually $1.30, and they liquidated millions of dollars of positions. And with Maker, you might remember from March 2020, where someone was able to buy up a bunch of ETH collateral at 0 DAI, basically, because of I guess the keepers kind of bugged out, basically. The keeper bots are the liquidator bots, essentially, and they just weren't there to kind of pay the fair price. So yeah, even the quote-unquote safest protocols have still suffered from kind of these exploits and things like that, right? Or kind of like something got to do with an economic exploit, which unfortunately isn't the aim of the game, the name of the game right now, because we're so early still. We're still, as I've said before, we're still in the pioneer phase. There's still a lot of risk, so you need to be comfortable with that risk. But yeah, I'll link this in this description. You can go check it out along with everything else. But this has been a long refuel today, so thanks for sticking with me for today's episode, and that's it. So if you haven't subscribed to the channel yet, be sure to do so. Give the video a thumbs up. join the Discord channel, subscribe to the Daily Gwei newsletter, and I will catch you all next weekend. And keep an eye out for that on-chain metrics video that I'll be putting out on the weekend. It's going to be a fun one. Thanks, everyone.